Hey there, it's Amy Lewis from the KFBK Morning News with Brandon Haefele from Catalyst Mortgage. PMI, you've heard that term maybe before, private mortgage insurance. Well, have you heard about mortgage protection insurance? They sound a lot alike, but they're actually not. They're actually quite different. On today's Catalyst Report, we're kind of going to sort that out. And by saying we are going to, I mean Brandon, because he makes sense of it all, of course, every week when we talk about things like this. All right, so let's start off, Brandon, with private mortgage insurance. What is that? How does it apply to buying a home?
Okay, so private mortgage insurance, PMI, protects the lender when you don't have the full 20% down payment. You know, there's a common misconception that having PMI on your loan means that if you were to pass away or something happened, that your home would be paid off. And really, it does not. It protects the lender for default if you, the borrower, were to stop making payments and let the house go.
Okay, then mortgage protection insurance. What is that and why is it different from PMI?
Yeah, that's the good one, really, for people to consider if they're looking to protect their loan and protect a payoff of the loan if something were to happen to you. Mortgage protection insurance is a separate policy that you can purchase, usually from a third-party company, that will give you a payoff if something happens to you. They're two totally separate things, but again, some people will confuse PMI for private mortgage insurance that protects the lender to mortgage protection
Because
insurance.
I'm thinking right now, I've heard PMI a lot. I know that, you know, we've talked about it on the air. We've talked about it when we've talked about our own home loans. But mortgage protection insurance, as you're saying, is the better way to go in a lot of different situations.
Well, in a lot of cases, if you're putting less than 20% down, you're going to have PMI, private mortgage insurance, that protects the lender. Now, PMI will be on your loan until you have, let's say today, right now, you purchase at 97% loan to value, so you're putting 3% down. You will have PMI on that loan to either A, you hit 78%, loan to value, so you paid the loan down that much, but also for a minimum of 2 years, and then it can be, can be removed. And the way it's removed is by contacting your servicer. They'll have an appraisal done, and of course take it off. The private mortgage insurance is a separate add-on that you can get, sometimes through the lenders that you work with, but also independent companies will send you stuff in the mail, and that's a separate policy that you purchase to protect yourself in the event of your death. And in some cases, it all could be work-related. If you lose your job, there's different kinds of private mortgage insurance that you can get to make sure that you are, covered.
So then, when you talk about this, what is the responsibility of the home buyer to know this information or to trust in the person that they're getting the home loan through to tell them that information?
I think it's big time on the buyer to do your research and to really find out what they're offering. Again, it goes back to the misconception of what it's for. And I think that at the same time, when you're getting pre-approved, ask the questions. Okay, hey, I'm going to be buying this house. Do you also offer mortgage protection insurance? If you don't, you have a partner that does offer it. If that's something that's important to you, and I believe for most people it is. It's something that you really want to have if you're putting less than 20% down, first-time home buyer. And even if you're putting, even if you have a 50% loan to value, you have a lot of equity. It still is something that will pay off your loan in the event something that happens to you. But again,
when you say something, I'm sorry, go ahead and finish that.
I was going to say, private mortgage insurance protects the lender. Mortgage protection insurance protects you.
So when you say something happens to you, is it something like you said, you die, or could it be something like you lose your job and therefore your overall financial situation is vastly changed?
There's different types of it. Mortgage protection insurance only covers the mortgage. Now, there's of course other products that will offer full income protection, but private mortgage or mortgage protection insurance only protects you on the mortgage. So if something happens to you, potentially lose your job, you can actually use that, depending on the policies too. And again, it comes into being a smart consumer. Do your research, look at the different options. Don't rush into something. And if you get stuff in the mail, for solicitations to purchase it, do your research. 3, 4, 5 companies. Shop around, just like you do for mortgage. Shop around for this as well.
All right, so like when I was in college, the professor would say, so now to review, kids. So let's review this just so that we're all on the same page. So PMI,
private mortgage insurance, protects the lender because you do not have a full 20% down payment.
Okay, and MPI,
mortgage protection insurance, will protect you in the event of death, potential, catastrophic accidents, and so on. Depending on the policy, will protect you and or your family.
Which is why we're doing this, because as the home buyer, as Brandon said, you owe it to yourself to be educated about that. So that's why we do the Catalyst Report, right? So you are educated. So if you want more information,
feel free to give us a call, 916-287-7777.
You can also always go on Facebook because all the Catalyst reports are there. Check them out. You can review the weeks past too and find them all out. Also, by the way, listen to the Catalyst report usually on Mondays from 7 to 8 on News Radio KFBK. Thank you, Brandon Haefele of Catalyst Mortgage.